Welcome back to another episode of the Finance Bible podcast. Zeke here.
And your co-host, Oscar. But before we get into it, please note that nothing in this podcast should ever be considered as personal financial advice.
Of course, if that is what you are seeking, reach out. We'll get you in touch with the correct professionals. Get the job done properly.
Sit back, relax, and enjoy the show.
Let's get into it.
Today's a very special podcast episode for a member sitting to the left of me. It's one really about statistics, numbers, percentages, and kind of everything in between, which Zeke, if anyone is a new listener or those who have been around for a while, you know that he's obsessed with the numbers. So, mate, welcome.
Oh, that's a good welcome, and I can confirm for all you pitbull lovers out there, we are reporting live, not from the tallest building in Tokyo, but from
Opposite the tallest building.
It could be opposite the tallest building in Sydney. I don't know.
No, I think the Westfield Tower's up there, isn't it?
Yeah, well,
It's probably second tallest, the World Tower.
It's up there, but we are reporting live, and yeah, we're talking a lot of numbers, a lot of statistics. Everyone out there is probably well aware because for some reason the news goes crazy when we're talking about rates and RBA rates, like interest.
It does go crazy.
We've just had the interest rates put on hold again.
As expected
let's
by
talk about it.
Many experts in the field. 4.35%, hold once again. But the main thing is...
breaking it down.
Yeah, but breaking it down.
Yeah. So to break it down, there's a lot of different topics to go through. We've got some that we're going to chat about,
Inflation.
Consumer spending, inflation, the labour market, unemployment. There we go.
The unemployment is a big one.
Mortgage rates, common sense, the household sector.
Bit of economic risks.
Yep, uncertainties, you could say.
Geez, you're a happy man tonight.
And a little bit of an outlook on the property market as well, which is not very in-depth, but it's just a bit of common sense application.
Due to the rates, yeah.
So
coming down.
I guess we'll just jump in straight onto inflation. Like that is probably the main thing that people consider when they're talking about interest rates and the RBA. So the current inflation rate, 3.6%, which is well and truly above the target. They aim for between 2 and 3%. So it's up there, and it is coming down. It's been higher in the past, as we've seen. When we're talking about the inflation rate and the spending, the CPI and that kind of thing, what we need to take into account is actual spending. One of the key things to talk about there is discretionary and non-discretionary, like when we're talking about the rates going up and what CPI is inflation. Discretionary spending rose by 1.3% this quarter. And everyone's out there probably thinking like, geez, 1.3%, that's actually quite a lot, which it is. But here's a few things to keep in mind. First of all, while there was a rise in discretionary spending, so things that you don't have to spend money on, but you do. So they're like optional kind of things. While that went up, other things went down. Included in that statistic, retail sales. They fell 0.4%.
It's a massive drop-off.
That's actually pretty
I honestly am quite shocked at that. I thought that would continue to rise.
Yeah, well, the fact that dropped, but your discretionary spending still rose a whole 1.3%. We've got to figure out what actually attributes and contributes to that specific statistic. And for me personally, in the industry that I'm in and from what I can see year in, year out, insurance is probably the biggest factor in that mix. And I'm fairly confident in saying that would be majority of the reasoning for that. Insurance has gone up drastically over the last 3 years. In fact, I've had clients who I consistently help them with their insurance for their property, like building insurance or landlord insurance. And I've had policies go up from about $2,000 a year to $8,000 a year. Some of them even getting rejected or offered $18,000 a year premium. So that's a huge factor because everyone's going to renew their insurance. They're not going to go, oh, it costs too much, I'm not paying for it. Because then if their house burns down, what's more expensive? $8,000 a year or $500,000 for a new build?
And then it comes to making sacrifices, obviously, as we can see here with the retail trade dropping.
Exactly.
So you're paying more with your insurance. So then obviously with your weekly income, you've got X amount there set aside for things. But if your insurance is increased, well, that's also taken a snip of your money left over. So that's kind of, it looks like from looking at the graphs here, that's where the majority, that's what's happening to
Yeah,
the majority of families, individuals right now in Australia.
the insurance cost as a whole, like whether it's life, property, whatever, has multiplied by about four in the last 6 years, which is outrageous when you think about it. Like, what else
Yeah.
is multiplied by nothing? Um, or even four times, even three times. Name one other thing.
Yeah, it's
I
ridiculous.
couldn't tell you. But the other thing to take into account as well is another reason the retail sales could have fallen is not only did the discretionary spending, like insurance and that, go up 1.3%, but non discretionary went up 0.5% as well. So non discretionary can include things like fuel, housing, and
Food,
health, like things that you
just your
have to have.
shelter, food,
Yeah, it's
water,
essentials, really.
everything you need to live.
Yeah,
Health.
yeah, health, housing, fuel, and I mean, if we look at fuel,
Oh, fuel is ridiculous.
I mean, I
I
feel
thought,
weird calling it fuel. If let's
well,
say
I'm diesel.
petrol, diesel.
Diesel. Mine full tank the other week was $180,
Yep, the
which
boys
is ridiculous.
out there with AdBlue.
Ridiculous.
Yep.
Couldn't believe it.
Yeah, well, I filled up the other day, and generally speaking, I used to fill up, and
I was with you when you filled up, mate.
what gets me and why I notice it's gone up is I'm normally just go there, I just throw the card down, bang, it's
All
paid.
good.
I don't think of anything.
Forget about it.
I had to put my freaking pin in the other day,
Well, that, yeah.
and I'm going,
Because there's a
hang on a
certain
minute.
threshold when you need to put your pin in.
Yeah, so it must have been over 100 at that
Oh, yeah.
particular servo with that particular card.
Definitely.
But I was just thinking, I haven't done that ever for petrol.
Mm.
And then I looked at it, was like $2.28 or something a litre, and I was like, yep, okay, that's when I was back home last, I was filling up for like $1.70.
Yeah, now it's
Big jump.
minimum in the twos.
Yeah, that's cooked. But that's a bit about the discretionary and non-discretionary. What else do we want to jump into? You pick a
I want
topic
to
for
talk
next.
about mortgages, mortgage rates, etc. Especially those individuals who have fixed their loan the last couple of years. So a lot of people, a lot of families are actually coming off their low rate fixed loans this year, if not already. When that happens, they might have fixed their loan for around 2%, for example. Now it's you're in the fours, five, sixes. You will feel a pinch. They will feel a pinch. So that's going to be a big issue. And that's going to come back as well to the retail spending. And I think we might also see a drop in that as well, or continue to drop, because if your insurance is already high, then your repayments are going to start, increasing as well. You're left with not much playroom at all.
Yeah, well, give or take, about 35% of the fixed rate loans that were outstanding in December 2022, so the end of 2022, will actually expire this year,
Yeah,
2024. So if you've got
that is a
35%,
lot. That's a lot of people affected.
yeah, so they're all jumping up like probably 2 or 3% to be honest. Like, yeah, sure, it's a bit of a guessing game, but if they were sitting at like 1.5, 2%, they're
And
going up to
1% is a
five,
big jump.
6.
Depending on your loan amount,
Oh,
1% is a
yeah.
massive jump.
Well, 0.25 is enough to make an impact. So
Yeah. And if you've got a family of even one child, it like I can't
even
talk
without him,
well, I can't talk from experience with a kid, but from what I see and people we speak to and clients, it really starts to get tough.
yeah, well, when all of them drop off and go back to the normal rates or normal, what actually happens is we're going to have the average loan in Australia, the overall average rate at the end of this year is going to go up an additional 0.35%. So that's not saying that if you're already on variable, yours is not going to go up 0.35%. It means the average across the whole of Australia from
Yeah.
the people
From
dropping
the
off a
people coming
fixed
back up.
is going to be higher. Again, that'll have an impact. With the inflation, like again, the other thing to think about, and this is a whole other topic, but we'll just go on to it now
May as
because
well.
it's in my head, is immigration.
Yeah, right.
So
Tell me about
if we've got more people coming here, and don't quote me on these numbers because I read about this probably a month and a half ago.
it.
But when I see something, I see it.
Yeah, Mike Ross.
Yeah. Um,
Love that
I
microscopic.
do love that
You
compliment.
love that compliment.
I watched that show purely because of how many people told me that, and I was like, "Oh,
You
who's this
soak it
guy?
up.
I'll watch it."
I wish I had photographic memory like you.
Thank you. The numbers were so far in 2024. I think we've had about 600,000 people come into the country. We're running between like the 300, 400,000 for a while there. COVID happened. We went down to sub 100,000, and then we flew all the way back up to like six, give or take. With that many people coming back into the country, even if we're all reducing our spending, that 600,000 people are going to contribute to something, aren't they?
Hmm.
So that could also have an impact. And 600,000 people as opposed to 50,000 coming into the country in 1 year is going to make a huge difference.
Massive difference. It's just common sense.
It is.
Now, let's go back to the cash rate, for example. So, a lot of experts, etc., and yourself are expecting to drop off over the next, let's say, 12 months back down to the 2.85% mark. So, when that happens, you'll see a lot of what I believe, and I'm sure you're the same, property and investing in property will become, let's say, popular again.
Well, yeah, you're going to have, and again, this is the ultimate crystal ball, isn't it? Like, yeah, sure, we can be industry experts or whatever, but we can predict things and hope that it works out. I would say, yes, we're probably going to have a drop of about 1.5%, between 1.2 and 1.5, I'd say. I'd probably personally say in the next 18 months.
Yeah, well, there's studies
Um,
out there showing that there's going to be around six consecutive drops of 0.25.
yeah, and that's how I think they'll do it too. They won't do a large drop because people will go crazy, and we see
Mm,
what happens when that happens.
yes, we do.
It's bloody just chaos, like Cat in the Hat.
Cat
But
in the hat.
that is a chaotic movie. I can confirm those things are running amok. But if they drop it, say 0.25 in August, which is when I personally think the first one will occur, then they're not going to drop it again in September. They're not going to drop it again in October.
Hmm.
I think over the next 15, 18 months, they're going to do 0.25 here, 0.25 there, and 0.25 there, and slowly let it drop down to about the 2.85, 3% mark, which will have a huge impact on people, and then do exactly what you just said. When the rates are dropping, servicing for loans go up, the property market gets very excited.
And I think as well, because yes, it's still not the lowest of lows in terms of when it drops. I think it's just when people see that the cash rate will go down to what it's been in the last 2 years, in their minds, that will be, oh, free money, let's go. Even though it's not, it's still expensive.
Yeah, it's funny
Realistically,
how
it's still like quite high.
the high has become normal now.
Yeah, it's just the psychology of people. So that's why I think people will go crazy, and we're seeing it in a lot of different cities in Australia at the moment, with the rental markets, and even when we try and purchase a property for a client, that if it comes on the market Tuesday, that's gone Wednesday night, and that's had 20 applications already. And I think that's just going to continue to increase in the next probably year, 12 to 24 months.
I think it definitely will increase, but the other thing to take into account, which is actually it's kind of a, I'm going to cop it for this, but it's a good thing, what I'm about to say, is although the interest rates are going to go down, like, maybe 1.3, 1.5%, in turn, that means that the actual average rate will only go down about 0.9, 1.2. Because, first of all, the banks pass it on.
Mm.
And second of all, we've got people fixed now. So people will be fixed on higher than what the variable is, and the variable will go lower. So
That would suck for them.
it will, but it does good things for the economy in terms of people won't be out there spending crazy amounts of money contributing to the inflation all over again, and then we end up exactly back where we are.
Yeah.
Everyone is screaming, going, "Crap! I can't afford fuel. I can't afford this. I can't do that. I want to go on a holiday." And it's a shit life, but it is what it is.
It is what it is. And that kind of leads to you've got to have a job to get a house and invest in property. And that puts us perfectly with unemployment and the actual unemployment rates, which is
Yes,
a this research is very interesting. So the ABS,
I love the ABS.
the A, the ABS has stated that the unemployment rate is 3.8% across the country. But there's studies done by Roy Morgan, who actually competes with that and says the unemployment rate is realistically 9%. Reason being, I mean, they've included the underemployment rate of around 6% to that unemployment rate. And the ABS haven't included that. So, it shows the public unemployment rate's 3.8%. Oh, this is great. We're doing so well. Congratulations, everyone, pat on the back. But through everything, it's really not as good as it seems.
And there's a few key things that I love to point out with that statistic from the ABS specifically. What they don't tell you is that's 3.8% of the country. The actual workforce, guess what? It's more like 7%. And with Roy Morgan as well, if it's 9-10%, then it's actually 20% of the overall workforce. 20% of the
That
workforce
is,
being unemployed or
oh,
underemployed
yeah,
is hooked.
ridiculous. I think it was around, 3.1 million Aussies
Yeah, which is a
all up.
huge number when we're sitting in a country of, we haven't hit 30 mil. We're at like, what, 29 or 28 something, aren't we?
And it's the highest figure of unemployment for 3 years since October 2020.
It's just,
And we know what
it's
happened
up
in
there.
2020, COVID, and everyone just stopped working. So the fact that we're even further from that, like we've increased a shitload from COVID, is very alarming.
And the ABS, I'm just going to leave four little dot points here with you guys to ponder on.
Oh,
A little something for your spare time, maybe while you're dozing off. I feel like my voice was
yeah,
very
that
soothing
voice is
when I said
very,
that.
very odd.
Yeah, no, everyone's going to just replay that on repeat while they doze off.
Oh, yeah.
Um, the ABS will remove individuals from being counted in that statistic of unemployment. So if you're not actively seeking work, then guess what? You're not unemployed according to the ABS. So I'm just chilling at home. I quit my job. I'm not seeking work. Well, I'm not unemployed according to the ABS. I'm just chilling.
How many people? There'd be millions of people like that.
Yeah, millions of people on, or maybe on Job Seeker that aren't actually seeking jobs. I know a lot of people who,
There's just people
who
playing PlayStation.
yeah, all that, which is a good time. But
It is a good time.
the amount of people I actually have encountered who are on Job Seeker and they've found a way to trick
But
the
still, right
system.
now,
Yeah, or just at any point in their life. A lot of them did it during COVID. And this isn't friends; it's acquaintances and people that I'm uh, familiar with. They, what is that smile?
just the way people you're familiar with.
Yes. Um,
Whenever you say things like that, it's very sus,
okay. Well,
especially with your facial expressions when you say it.
we'll let the
If we had a
listeners
camera here,
decide.
everyone would be agreeing with me.
No, I think that I'm going to get some backup on the Instagram tomorrow saying Oscar needs to calm down.
Fair enough.
Um, yeah, I know a lot of people who are on Job Seeker and they just apply for outrageous jobs. Like, they're 24-year-old, haven't gone to uni, haven't done a trade. Like, they're just big chilling.
Just to keep getting the
And
money
they're
coming
applying
through.
for CEO positions and getting turned down and be like, oh, I can't find a job. I have to keep getting
So
paid Job
they're
Seeker.
applying for jobs they know they're not going to get.
Yeah, or if they actually get offered an interview, they just go flunk it anyway.
That is actually quite ridiculous how there's really nothing in place to stop that.
It is absurd.
So people can literally be sitting at home right now,
Yeah.
just pretending to apply for jobs,
Mhm.
or not pretending, like applying for jobs they have no chance getting, just to get rejected and say I've tried.
Yeah, but the good news
Please pay
is,
me my weekly allowance.
even if they're not doing that, they're not unemployed according to ABS.
And I don't know
So,
how that is. Yeah,
magic.
it's just goodness.
Yeah, individuals who are
Almost getting
not.
as triggered as Raymond was in our
Oh,
last episode.
no, that was brilliant.
Oh,
People who are not available for work also removed.
define not available.
So people who aren't available, they're ill, they're caring for people, they're temporarily out of the country.
Oh yeah, I'll go for a 3 year holiday.
Yep, yeah.
Don't have a job. All good.
No, you do.
You're
You
not
do have a job. You're not unemployed.
Yeah, you're not unemployed.
Yeah, or I'm just going to quit today and I'm going to take care of. I'm going to go spend time with grandma. Grandma's had a fall at some point recently. She's a little bit frazzled.
Frazzled, yes.
So I might just go care for her for the next 5 years, but don't worry. According to the ABS, I'm still employed. We hope you enjoyed the episode as always. You know exactly what to do.
Hit that follow button, subscribe, whatever platform you listen to this podcast on. Also share it to your friends, family, co-workers, whoever you think may benefit from it. But unfortunately, it's the end, and we'll see you next week.